Alright, what's up? What's up? What's up? Welcome back to another day in the market. Today we're trying to shit on this market, right? Trying to make some dough out of it. So yeah, let's do a quick market recap right before we get into today's day. Let's do some recap. Let's see what's going on, right? So let's look at last week, yeah. Let me open my H's. Hmm. think think might need to change it. Just give me a moment. Let me just set this up. DX feed connect. All right. So we got the DOM here. We got the tape. We got the charts. Yeah, we got the chart. Uh, I think I'll prefer a footprint chart here because it just makes more sense. Just makes more sense. You know. Yeah, I got my level 2 up there. And yeah, let me get a footprint chart around this place. I mean, probably. Let's see. Let's add some market profiles, right? Let's add some market profiles and TPO. Add to chart. Yeah, so this is gonna be our main chart, right? So this is gonna be our main chart. We're gonna do some analysis on this chart. Let's collapse this. Yeah, so this is gonna be our main chart. And now once we have this chart set up, let's keep another chart for the bigger picture, right? Let's get this out. 5 minute time frame. There's 9 days. Yeah, it's just for the bigger picture, right? Because we gotta see where we are in the market right now. All right. So we need to see where we are, and we need to see our positioning in the market. All right. So that's why I'm gonna. I'll show you later on. I'll show you later on. Don't you worry. Don't you worry, my friend. Right. It's a little bit messy, but I think it's gonna be all right. Let's close this view up shit. Right. So just by looking at this profiles and TPOs, so we are backtesting using this Claude and Alpaca. We're getting data from Alpaca and we're trying to backtest um using Claude, right? So I tried to backtest the orb setup, but I don't think it's performing better. So we come from two balanced days, Friday and Thursday. So we come from two balanced days, and yeah, the setup tells me probably I'm gonna take it to the downside, right? Based on the liquidity we have. But if we look at the big trades, adaptive big trades, then we can see is buyers were coming up, and these right around this point, two buyers were coming up, sellers again. So we're in some kind of iffy position right now, right? Iffy, really iffy position. So let's wait and watch. This is exactly what we are seeing right now, right? Now, it's a balance. Is it this a balance day? Nah, I don't think this is a balance day. This is a trending day. We are trying to open outside the balance right now, right? We are trying to open outside the value area, and you see the volume distribution around here. It's really low, right? It's really small, and we use this low volume known as a fulcrum, right? So we just wait and watch. Let's see the footprint. What the hell? Is this really lagging right now? Damn, it's crazy. Just the chart, huh? Just the chart is lagging. Now, there's some sellers on the level 2, right? There's some sellers. There's a big buyer trying to buy from around this point. Now we just gotta wait and watch how this buyer reacts, and then we can take the trade too in that place. Damn, what's wrong with my chart? Damn, really? Just like that? What the fuck? Starting to just bug the fuck out. Alright, 36.5% win rate, and times the risk. The trade-off to know is win rate drops to 36%. You know, 3 tiers and you only profit because the winners are big. The mathematically better tool is to break even, and you're at 36.5%. But it's emotionally harder to run lots of small red days, punctuated by bigger green ones. Many people abandon a good true to one system during a losing streak. Worth knowing your own temperament here. Still a thin edge. Profit factor 1.14 with no slip is model better than before, but treated as promising on paper, not proven money. Hmm. This sounds. This doesn't sound the best, but it's gonna make it work, right? Yeah. So what's the problem with our chart around here? Why is the chart bugging out? So let's do a quick market recap for today. Now we took yesterday's, last week's London low and last week's all of the lows, right, of this balanced range. Now you could say this was a small accumulation, then manipulation and distribution, right? In terms of Wyckoff. Now we're trying to move higher, right? We're trying to move higher. We need volume to move higher. So how can we get the volume? How can we um get the liquidity, you could say, to move higher? Now let's draw a volume profile from this point to this point. Now as we can see, we are having some kind of high volume place around this area, and there's a void of volume right around here, right? Now what I want to see is some kind of a accumulation. Price doing is regular thing, and I want the price, the market to go down and do some kind of absorption, and then we can move higher, right? Brought from event, highlight 7 hours, 30 minutes in person, refund policy. Brought from expo, the premier brought from trading event series organized by brought from match. Location, Queen Elizabeth Central, London. What the fuck? You want me to go to London? Alright. This is day 62 out of 90 of the thing of trading the setup. So, a little bit. Alright. So what does the level 2 says? So there were some sellers. We did try to take the sellers. I mean the buyers. We did tap into the buyers. Now we need to reverse back. So we tapped into those buyers, saw some kind of absorption. Now this is exactly what we want to see, right? So I think if after we close this candle green, then we could probably take a long, right? So this is the exact setup we're trying to find right now. So just gotta be patient, you know, wait for the right moment, I would say.
Order filled.
All right, now let's target some more points, risking 2 points to get 10 points, right? Let's get 2 to get 10. Sir, let's move mouse up really fast. See, you gotta be quick in the market, right?
Order filled.
All right, let's take some. Seeing some rejection, but I still think it's gonna go up. You know, up 5 points. See some sellers at 70, 75, 90s. Yeah, 75, 90s up top there. But still, we're really bullish, right? A lot of
Order filled.
buyers in the market, and if we can break this high, then I think there's gonna be a nice squeeze. Yes, sir. Yes, sir. That's exactly what we want to see, right? You see the squeeze I'm talking about right around this point. So we got the squeeze. Now, am I willing to risk the profit? Am I willing to just sit there and let the market come back down? Of course, obviously not, right? Because that has bitten us many times, right? So that doesn't work out for us. So, based on our stats, So it's completely based on our stats that we have to take the profit. Yeah, if we get stopped out, then of course we can take a re-entry. But based on our stats, and this is completely based on research and this is completely based on stats, we take the profit, right? And we risk it in another trade, right? So a couple points, 8 points, 8.5. Might consider taking a
Order
contract
filled.
off. And yeah, let's let these two contracts run, right? Let's see how much they can run. All right, looking at the footprint, I see um some sellers coming a little bit, but I think they're getting absorbed. And at 75.94s, we have some sellers. So let's see how we break 75.94s. Let's see. Will we even break 75.94s? All right, we did break 75.94s, and I see some buying imbalance too in 75.94s. Some rejection too. Uh,
Order
6 above.
filled.
All right. So 138 for the day. If now let's just let this one contract run. So it's not too complicated, right? Unless you make it complicated, it's not too complicated. Just take a profit, just wait for another setup, have some patience, and you're a good trader. All right, just waiting on our setup. See some buyers, big buyers there. Now we will retest those buyers or will we take those buyers? Will the buyers hold or will the buyers give up? Right? And that's how we know if there are strong hands in the market or weak hands in the market. We don't want to be with the weak hands, right? Weak hands give um weak hands make you lose money, basically. Little bit of a retest. Uh, I don't see any buying liquidity right now. Unless I do right now, I see some buying liquidity. Sellers getting thin. Uh, yeah, buyers tapping in. Sellers getting thin. Sellers pulling out their liquidity. 75.95. Let's see if we break 75.95s. If we break 75.95s, then we might consider adding to the position, right? If we get a quick, nice reversal. Let's see. Yeah, so are these are these hands that are sitting at 75.95s? Are
Order
these strong
filled.
hands or weak hands? All right, so we got stops out. Stops out in profit, and from this point to this point. So not a bad trade, right? Not a bad trade. What was the risk to reward on this trade, right? So nice little scalp day, already up 168, still maintaining this winning streak, and yeah. So let's see if we can get another momentum in the market, right? So we turned right around 75.96.75. What happens around this point? Why did we decide to turn around suddenly? Market was bullish, everything was pointing to the upside, but why did we return back down? What was the point that made us return back down? So we gotta analyze, right? So right around this point, a big seller stepped in. 75. What was it? So 75.96. This is 75.94. 75.96.75. We decided to go on from that point, right? I think it's this the point. Yeah. So just look at this. Liquidity up there, 940. Yeah. So liquidity around there, right? There was um there was a seller capping up around this point. Now, as soon as this seller got filled around this point, you see how this seller just came in just like that, 60 contracts, right? This was 44 contracts, then 60 contracts just came in like that. As soon as that happened, as soon as that contract got filled, you see how these sellers started coming in, right? So how these sellers started coming in. Now, what happened? Again, it was trying to go up. They put some contracts around this point, right? They got some sellers around this point again. Now, so they're constantly trying to press the market down, right? With high volume. So around again, they're trying to press the market down again. So that's what made the market go down, right? So we know the strong hands are sitting on the upside today. Till now. I mean, you can never predict the market, but till now, we can see the strong hands are trying to push the market down. So they're obviously hedging, right? They're obviously trying to hedge or something like that. And let's do auto. Yeah, so obviously they're trying to hedge or something like that, right? So why are they trying to hedge? They're trying to hedge to get back to this mean reversion point, probably, right? To this place so that they can close their contracts, so that they can close their option flows, option option positions, and all this stuff, right? So so once we know that we're expecting a push down in the market, or a little bit of breathability in the market, then we just wait on our hands, right? It's the same like poker. Same like playing poker. You just sit on your hands till you get a nice move, till you get a nice combination, right? So we will just wait till we see those big hands getting shifted, right? You can see right here in the market live. See, I'm just showing you right now. See how these just zoom out and just look at these buyers. Just look at these buying hands, right? Just look at these passive buyers in the market. You see how the passive sellers in the market are bigger than the passive buyers in the market, right? So, and what's the market doing right now? So the market is trying to take it lower. See? Market is trying to take it lower. So we just wait on our hands. Because as we see, it's already a balance, it's already out of balance day. And it's going down inside the balance. That means it's trying to fill in some positions, right? It's trying to fill in some extra contracts so that they can take the market higher, right? That's how the volume shifts. That's how the liquidity shifts, right? And yeah, obviously they need some liquidity to take the market higher. There's no, so that's the context behind the move. You always gotta put some context behind some moves, right? Without context, you cannot trade auction market theory. And now, just look at this point. Just look at this point. What do you think? Right around this point, they came down and this gave a big ass rejection, right? What do you think? Around same price level, almost same price level, 75, 76. What do you think? The market came down right at this level, and market decided to turn around. See, there's no fucking rocket science, right? Market came down around this point and decided to turn around because there was a big hand sitting right there, and the big hand wanted some more position in the market. The big hand wanted to be bigger, right? So we just came down, filled in some extra orders, and we decided to turn the fuck around, right? So it's nothing complicated. It's not rocket science, nothing. You just gotta watch the market. Now let's look at the volume on those things on this heat map. See, heat map is really powerful tool in my opinion right now, right? See how we can see. I mean, we can see some of the book. We cannot see everything, but still, we can form a context. These sellers came in, big volume of sellers, no any reaction. Big volume of sellers, no any reaction. Big volume of buyers, right? Bigger volume of sellers. So, are they actually trying to hedge their position right now, right? If the sellers are coming in and these sellers are getting filled in, right? So the sellers are coming in, aggressive sellers are coming in, but these sellers are not moving the market. That means there's big passive hands in the market, right? Big passive hands, and these big passive hands want to buy cheap and sell more expensive. They want to buy at a cheap price and sell at a higher price, right? See these big hands, big aggressive hands in the market. Now we want to just wait and watch. Wait how we can take the market higher now. So the first trade we took was I would say it was a 5 minute opening range breakout, right? 5 minute opening range breakout with combination to order flow, right? I think opening range breakout is a nice strategy. I think it's been performing nice. So yeah, first trade was a opening range breakout. Um, we took it from this 5 minute candle right after this opening of this 5 minute candle, and right at this point we took an entry because it made a, what do you call it? It made a pivot point right here, right? Came up, you can see some sellers, came down to this value area high, break, retest, a pivot point, and then we took a long, stop around this low right there, and we took an entry, took maybe 3 times, 4 times the risk, made around 4 times the risk, and that's it. Quick little trade. Man, my connection is excellent. I don't give a fuck about no bitrate. All right, let's watch the jump. Let's watch the level two and try to figure out where the market takes us. I mean, technically, I don't have to take a trade because it's already I took one trade and it doesn't make sense to risk that profit, right? I mean, it makes sense to risk that profit if it's a really training day, but if it's a balanced day, then it's not worth it, right? So you gotta also determine how the market is going on and determine how do you risk that money that you just made or the money that you have, right? Because market changes every day and you gotta adapt to the market every single day. Don't predict in the market, just react. Just watch the market and observe the market and become a reactor, right? Don't try to be don't try to be a saint. Don't try to predict the market. Neither can you predict the market, neither can no one else in the universe unless they have a time machine, right? So see what happens in the market and formulate your plan right on the spot. And if you're wrong, and or even if you're right, after the market closes or after you're done trading, just look at your charts, look at your trades, and analyze what happened. Give yourself feedback. Have a self feedback loop and see what made the winners win and see what made the losers lose. See what made you lose the money and see what made you win the money. And after you make after you analyze that, make a plan based off it and implement that plan next day in the market. And that's how you become a good trader, right? You're if you're a trader, then you're basically a researcher. You're researching the market every day. All right. Think I have some ideas for videos. I'm just gonna cut out the sections from the lives and post it up. All right, we saw some sellers. Saw some sellers there. Now, now. Why do we see those sellers? What happened to those sellers? Why did these sellers not perform in the market? Why couldn't they take it lower? That's the question, right? You gotta ask that question. So sellers came in, they got exhausted. See the volume drying up from these sellers. Volume drying up. So we can say we see some exhaustion in the market, right? See the volume drying up. I mean the volume drying down. So we see some exhaustion in the market. Now, should we take another trade? Should we risk the winning streak? Let me know. Should we try to make more money and but potentially ruin ruin the momentum, or should we just sit around, take the trade maybe in a practice account? What do you say? Me, I think I might take it on my TraderVet account. Ah, boom. Yes, sir. Big buyers. Right as the momentum comes in. One con, two con. Let's put a stop loss around. Let's do three cons. Oh, did four. It's alright. Four cons as a stop. Really small stop. Because I expect a squeeze in the market. How much are we risking? $100. Not bad. Let's do four more. If we see another squeeze. If we see another squeeze, I'm gonna double down on this position, right? Alright. Now what's the profit potential right here? So late limit. Nice little 1:3. So what are the chances that we reverse back, and what are the chances we take this high? Let me journal real quick. Hmm. We see some sellers come in the lower half of the market. We see some sellers around this 75.94.2. Now, will these buyers hold up? Will these aggressive buyers or these passive buyers hold up? That's the real question, right? I anticipate a squeeze, but right now we're just chopping around. Now, I want to see a squeeze as soon as possible, yeah, because if we chop around too much, then we might actually get stopped out, right? There's a higher chance of getting stopped out in a chop rather than in a trending market. So when it's a trending market, I think it's better for retailers to trade it because in a trending market, these big institutions cannot actually formulate their position, right? They can only trade on small contract basis, or yeah, it's not even good for market makers. It's not even good for any other big institutions because they need some kind of chop to actually fill in their position and actually get into a trade in the market because they need some liquidity, which is a lot of liquidity, right? But for retailers, I think trending market is the best, right? You can anticipate a direction very easily, and you can anticipate your setup. Most of the retail setups work better in trending market. So yeah, if it breaks this low, what's the last point of defense? 89s. I'm at 90s. All right, that's the last point of defense. I'm at the last point of defense. Now, if it takes a last point of defense, it doesn't hold up, then I don't want to be in this trade. But if this last point of defense holds up, then I would want to take a trade. I would still want to be in the trade, right? So just right here, we're just waiting for the squeeze right now. So the last point of defense did hold up, right? Because we're still in the trade. So there's the last point of defense, and the last point of defense did hold up. Now we just want to see some of these sellers pull out their orders, and if that happens, then There's a lot of room to the upside. I'm just telling there's a lot of room to the upside. So right around this point, we have some big hands sitting right just like that, and as soon as those hands were about to get filled, we get a nice little rejection or a nice little absorption right there, right? So this is a classic absorption reversal setup. So if we break this 9750s, right, then we're gonna get some nice squeeze that we need in the market. Some nice squeeze to take us higher. Now I'm just gonna put my stop to the last point of defense. Just like that. Modify my trade a little bit, right? Now if this holds up, that's good. But if it doesn't, then that's good too. All right, we did break the high. We did break the high. Let's see some big buyers coming in. We see some big buyers coming in at this point too. Now let's see. Let's see the big buyers hold up. All right, all right, all right. We get seeing some absorption. Yes, sir. We came back in. Came back up again. So big seller hand sitting right there. Big seller hand, right? Big selling hands right there. See? See the liquidity is getting thinner and thinner. 7600. Let's break 7600s. If we take 7600s, then there's a lot of room to the upside. They might actually take it lower. 7600s, huh? 7599.25. So a nice rejection just like that. Wow. See, that was a nice it wasn't a nice trade, but I mean whatever, right? Whatever. I knew it was gonna go down. That's why I was trying to take some profit, but I guess it stops us before that. I mean, it's all right. I think that's it for today. Nice little start to the week. Just trying to maintain this momentum. Now we'll be back tomorrow, trading the same market, same time, same place, same setup. All right.